Hello, Theo traders. Today is the 9th of April, 2024, and Gianni DePoce is here with you to look at some charts. Want to start off by looking at the NASDAQ. It is down. We are seeing consolidations pretty much across the board in various equity markets. Now, over the last couple of weeks, we've seen some outperformance, mainly in the sectors associated with the late stages of the equity market cycle, stuff like inflation-related trades, energy, basic materials, even utilities a couple weeks ago were one of the top performers. But I've been singing more of a cautionary tune over the last couple of weeks, but I'm starting to shift that and become a little bit more bullish here. I think that stocks have really managed a healthy, successful consolidation, and I think have managed to correct more through time instead of price. So this could turn out to be pretty bullish over the next couple of weeks. I'm not ruling out the possibility of a decline here, even later this week or into the next couple of weeks. But I think we would have to anticipate a higher low and eventually a rally back to new all-time highs. So in the meantime, markets are eagerly waiting for the CPI report tomorrow. We had another strong payroll report last week, and per the Phillips curve, this is not helping with the prospects of rate cuts by the Fed later this year. So I think what is going to happen, my personal opinion or forecast or take on this matter, is markets will continue higher, inflationary pressures will start to rise, and then eventually you'll see a correction unfold due to the market discounting a shift in consumer behavior due to inflation. And that will be the catalyst for the Fed to actually cut rates. I think it'll have to be market weakness because as it stands right now, the economy and the market overall is able to handle these rates. Now, if long-term rates rise, they're still lower than short-term rates. Remember, the yield curve is inverted. Then that could change, the market dynamic and the capital flows. So right now, I think tech showing some signs of strength. You can see here with semiconductors are outperforming. They're up a little bit today, and these are solid consolidation patterns. When it comes to the Philadelphia Semiconductor Index, looks like a nice symmetrical triangle formation there. I'm not really a hater of this chart here. Now, NVIDIA, if you take a look at this, it did break below its ascending channel. So this means that this stock's rate of ascent or the rally slope is no longer in effect. That does not mean that it has entered a bear trend or the bull market has been nullified. So we'll just have to see how this shakes out through its next consolidation. If you go back and look here, what it did in that period between May of last year and December, this stock can spend months in sideways price action. And if it does that, I would argue it's more constructive for the longer term performance of the stock market than if it just continued to rally higher. So take a look at the S&P. It's down a little bit today as well, but the Russell 2000 is up. So that's not entirely a bearish signal. But something to definitely keep an eye on, because if we zoom out here and look at the weekly chart and the Russell, it is still well off of its all-time highs from November of 2021. So it's very much on sale. Okay, let's go ahead and take a look at bonds because I think there's some interesting price action here. You had a drop to new multi-month lows yesterday, a little bit of a rebound. You had a bond auction earlier today with some mixed results. I think we're waiting for the CPI report to get a better direction in the short term. I still favor the downside. I think long-term rates are going higher, and the Fed's going to be trapped, and they're going to have to make a decision here. Do they want to go after inflation, or do they want to sacrifice economic growth? And I think they're going to pick inflation. It's really not politically popular to have to deal with inflation. But even if bonds can manage to rally here, I'm looking for this only to last maybe another week or two, and I would look for another lower high. We might get sent back lower. If we do drop in the 30-year bond into the 113, 114 handle this week or next, I think that could lead to a temporary low, and you could see a rebound off of that, but I still favor the downside in this space. And it's pointing to continued outperformance over the intermediate term by inflation-related sectors. So crude oil pulling back a little bit from its recent high here. Still think this is a bullish chart, but we did come in with within a few cents of our upside target in the $88 to $90 area. The high was actually at 87.63, so that might be good enough to satisfy that, but I'm really pleased with the overbought rating on the RSI indicator. Confirms that bulls have captured momentum. So now I'm looking for a higher low to form and for the bull trend to be reinforced. But quite a few of our energy names that we've been tracking did rally to new highs. They're coming back a little bit now, but I'm looking for higher lows. PBF, Matador Resources, and Viper Energy. Actually, Viper Energy is making a new high today, showing some really nice relative strength. But we did drop in the Theo Trade chat. Our upside target in TechNip FMC was satisfied at 27, so we did capture gains on that initial position. And also, I've looked at some potential long positions in Marathon Oil and SM Energy. So I still think the energy trade's very much alive. But over the next couple of weeks, don't be surprised to see some backfilling as, once the public starts to pay attention to a move, 80% of it is done. So we've not really been adding too aggressively in this space over the last couple of weeks, with the exception of MRO and SM. Still had good risk reward setups. Take a look at gold and silver. Gold hit a new all-time high. Silver hit a new multi-month high. Silver, I'm going to zoom out here, and you can see that silver has almost exceeded its high from May of 2021. If it does so, I think it's going to get very bullish. I've been talking about silver in the $35 area for quite some time. But, if we break out from this longer term saucer formation on this weekly here, I can't rule out silver in the high $30 area. Not my preferred target, but I want to see if we can get to, the $34, $36 first. But a lot of the names in the space have been doing well. Anglo Ashanti did make new highs. We've been talking about this stock for quite some time. Agnico Eagle Mines also made new highs, and we've also been watching trades in Goldfields, GFI, and AGI, Alamos Gold. Those are also displaying some nice relative strength. So I do want to jump back over to the tech sector, because, we've talked about the good risk reward opportunity present in Apple, and it's still holding above that stop loss that we have here on a close below 166.89. Basically, as long as Apple's above there, I want to give it the benefit of the doubt from the long side. On the same day that we issued that buy alert for Apple, we issued a buy alert for Google. Google has rallied to a new all-time high. So this one is doing exactly what it's supposed to do, and I think it will continue higher. But when you look across the board in what's going on in the tech space, really the only stock within the Magnificent Seven that's not doing well is Tesla. But some may even come up with a nice argument with the idea that this low was a low of significance. Not something that I would buy necessarily, but it did come within a few cents of our first downside target in the 160 area. So could be good enough, and definitely something to keep an eye on, because if Tesla rejoins the party, then I think it's going to be a major tailwind for the equity market overall. I want to wrap things up today by looking at Bitcoin, because it looks like we were starting to get a breakout yesterday. We've since given back those gains. I have a tough time thinking that stocks are going to pull back significantly as long as Bitcoin and crypto are holding near their highs. But seeing some selling today, so it's going to be interesting to see how, if at all, this market reacts to the CPI numbers tomorrow. But again, something to keep an eye on, because it's been such a good risk measurement for risk appetite with respect to the equity market overall. And again, as long as crypto is not coming down significantly off its highs, I think stocks would do well to continue consolidating and building a nice base. But again, I am looking for new all-time highs in the coming weeks and months before eventually seeing a more pronounced pullback lower. I still like the idea of stocks experiencing, a 15 to 20% pullback at some point this year, but I don't think we're there yet. I think the market still believes that the Fed can pull this off. But the most dangerous words in this business are "this time is different." I don't think this time is different. It rhymes. It's not the same. It doesn't repeat, but it rhymes. And so, given the strength that we're seeing in some names, even like CrowdStrike, this one is successfully consolidated near its highs. I like the price action on this. I even have a setup to potentially add back to this stock. I've owned this one since I think it was like early October. And then another one of our stocks that has continued to display significant relative strength is AppLovin, that hit a new multi-month high today. So that is something you would see in a bull trend. Rising within the ascending channel. I like to own stocks in channels, rising channels, especially in uptrends. I don't like to buy ascending channels in uptrends. I'll buy a descending channel in an uptrend, but not an ascending one. So that takes care of everything that I wanted to review with you today, everyone. Thank you so much for watching. Hope to see you in the Theo Trade chat room. Until next time.